Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday. And we are now on the 9th of September 2020, about 6:20 p.m. Central Time. So this morning, we saw the market taking off to the upside, getting the correction day. We captured that. We're getting follow-through an early evening trade today. Gold even rallied with these other markets, as did a bunch of the metals. The euro tomorrow, we've got to be very concerned about what the monetary policy statement says, if there's any key changes. And what are they going to do about inflation? We know they're going to talk about COVID. I think there's enough money already in place for them to handle that, according to the central bank. So we'll be looking for statements there, of course. And of course, Brexit. That looms right in front of everybody. Ms. Lagarde's got her hands full tomorrow. On the energy side of things tonight, if you looked at the API numbers and they came out today instead of yesterday because of Labor Day, you got a net draw of about 1 million barrels. I don't think the market's that pleased with it. You can see you're really not going anywhere off that news. So when we look at the S&P, we can see that so far for the week, we're not down that much. You're down 0.25%. We've been through heck and back, you know that. But you're still down, and 7 points for the week. Now, last week when you take a look at the market, here was the week of the 4th. This is where Thursday, the 10th, remember, these are all weeks that you're doing right now, and you get an idea of that correction. But so far, it's a correction. I don't think anybody's saying it's a market top yet, at least the mass aren't. I think I heard one analyst said that he does think this will prove to be that the market's got a rocky road here for September. I can live with that. But he did not go so far as to say on, I think it was CNBC, that this is a market top. So we'll see what people think about that. What we're probably seeing in the markets is absorption of this massive move that we had in August and what it did to price earnings ratios on the other side when you're really looking at the companies that make this up and deciding, does the market have to consolidate here and what is the right ratio numbers? That's part of what's going on. But you have stepped out of the trend. You can see that. You have a pattern here of a higher high and a lower low. That is not a trend. The market's done something else. You haven't stayed under the 18-day average of closes, stayed under it, if you think about this, since back here in June. How did the market resolve that? Went up for new highs. Until this stops, I'm going to look at these breaks as no more, that we have situations where the markets consolidate and then they make a move later on and the markets look forward to another set of highs. I know that's hard for a lot of traders to absorb, but that's where I still think we're at, because if you've been playing anything but that story, you've been left behind in these markets. What we've really done is, if you look at the Bollinger Bands, you've gone from the high band, and let's go to today, not tonight. Look where the market stopped. If you get my morning subscriber video, which I record around 5:30, 5:40 in the morning, right in that time zone typically, I told my subscribers today, I look for full covering of short positions against the Bollinger Band. Market had not hit that number yet. It was still coming down. And that's basically what happened. Then, I don't mind telling you what I wrote in my research this afternoon at 11:30. Well, I think it was noon today that I published it for my subscribers again. I said, don't be surprised if you try to see a rally back to the 18-day averages after hitting that, and for the market to run into a pause at that. I still think that might be what's going on. I'm not certain, obviously. Part of what I've said is right, and we'll see if the market can extend. What else happened? You were oversold. So if we come here, there's a reason to the madness that I have. First challenge of a Bollinger Band, my rule is, I think the program trades, I think the smart traders take money off the table. 95% of the time you stay within the bands. There's ways to catch it and try to get back in if that isn't the case, but you left an awful lot on the table from today's low of 32.95 to 34.24. That's a move in itself, a monster, and you've got momentum that is correcting an oversold condition. You're no longer oversold. You have no trend at work, and you have bias down with the resistance point at the 18-day average of closes. NASDAQ. I admit I said the same thing here. I pointed it out. Now, did we hit it? We did not. We missed it by 20 points, but I was expecting that if it hit it, would have found the support. Again, I wouldn't be surprised if you continue to rally, that the 18-day average offers the resistance. And again, there's no trend. The Dow, yes, it made me look pretty good. Market came down this morning, hit it, and went back up. This is the one I got right, and hit the 18-day average. I'll just show you. And it completely stopped in its tracks. So those were the things, the way that I set up the trades in the morning for different traders that are looking for my subscription stuff, and it's a lot more than you get here. You're looking at the beginning, and that's this. It's got everything in it. So I'm still looking at that, but I don't see a trend in them. And the Russell, I didn't expect to have to get down there. It's already been under the Bollinger Band. So getting back over it was what I was looking for, and that's what happened today. You had several days under, now you're over. You haven't set up a trend, you haven't done anything. I can't even say this is a clean breakout to the downside. Sort of a lost chart is how I'm reading it. What I did point out early on was, why was the VIX? Yesterday, I was real bothered by the VIX. Here's another big break in the market, and the VIX can barely hold on, staying within these bands. It had gotten to the 100-day average and fell back. I think this was your tip-off. You were going to get a rally in stocks today, and that's what I was saying in this morning's my subscriber video, and it looks like that was the case. Then we get to the bonds and the notes. So this is September. I'm going to start leaving these. I want you to know, I think it's time that we can now move to the Decembers on everything. So I thought I'd just finish up with this with you. But I'm looking at the resistance point here. You've got the swing line up, higher lows, higher highs, momentum pointing down, bias down. The market's got no trend to work with. It's got the swing line up, which is part of a trend, but it's being countered by staying under the 18-day average closes. Excuse me. 10-year notes, same thing. Higher lows, higher highs, and uptrend. Supports the 18-day average of closes. You'd have to break through 139. I think that number is 139.06 in order to break this and say, the market's left an uptrend. It's going to try the downside. But even then, here's what I see on this. Do you see the sideways action of the Bollinger Bands? You're entering what's called a pipe. And if you create what I think you're going to create, the market goes sideways for a while to try to determine, should it build a base to move higher from or a top to drop from? And we could be beginning to do that. In the Sept dollar index, you hit the upper Bollinger Band and you stalled. Overbought, hit an upside target in an uptrend. I think traders are now stepping away from that. Eurocurrency, why would you go through the report tomorrow for the monetary policy and whatever Ms. Lagarde has? You've hit your downside targets. This is how we looked yesterday. This is Tuesday. If you look at the low 117.66.5, you had missed the lower Bollinger Band. If you hit the band, what are you supposed to do? Get out of shorts. Market came right to you, hit it, and away you go. I think you're neutral going into whatever she says, but I'll leave up to you. The Japanese yen, we have a pattern here that I can argue with higher lows, but I do see lower potential highs or higher highs here. I'm going to call it a higher high, higher low pattern that refuses to settle and stay over the 18-day average of closes. This swing line wasn't established until this day, so I don't think the pros would have been long at any point here because you haven't closed over that number. I think that a lot of the systems that are swing trades, I'm not talking intraday trades, are looking more or less, does everything fit into a pattern? I don't see that right here. Bitcoin. We thought, at least I thought, that you were going to find your support between the 100-day average and the lower Bollinger Band, and so far you have. The market, is it embedding? Well, if we go back a day or two, you'll see it isn't. So you're not there yet. You're just in an oversold condition, under a lot of pressure. We'll see how the market does here at roughly the $10,000 level. Here's the differential now between the November Brent and WTI oil. So I've left the Octobers now, and you could see you're fighting your battle right at that 18-day moving average of closes. Market's not giving an edge to either one of these markets. You fell down, hit the 100-day average yesterday, again today. You're trying to climb back inside the Bollinger Bands. This was a pipe. It is now a massive top. Can it be taken out? Certainly it can be taken out. Does it look like it's going to be? No. Is the market got a lot of resistance on the way up? You betcha. And I think there's a lot of resistance right in through there. In WTI, I see the same pattern. You've hit your first downside targets from what we call a top now. This was a pipe. You broke out. You hit the 100 in the lower Bollinger Band, and the market, for whatever magical reason, decided to hold there. It's not throwing out any buy signals. I can imagine there's some short covering with the oversold condition, but I don't see anything bullish. I'm going to finish up the October gasoline with you and then move you into the November as well. Oversold, running the lower Bollinger Band. To finish this off, it wouldn't be a bad idea if you can get down to that 100-day moving average of closes in green, but resistance pretty formidable at the 120 level right now. In Nat Gas, and I'm going to be moving here out of the Oct into the November as well, so be ready for me to do this on a lot of the contracts so I can get all the months the same. But the slow stochastics lost embedded reading. You went back to the 18-day average. Now you made a lower low, higher high. I left this here because of the chart pattern, I can't quite figure out where to put the arrows pointing, but I'll call the chart, my professional word, a mess. The market's got distribution here. It's now a consolidation, and it's that funny time of the year where you don't need a lot in that gas. Other than out west where the heat is just unbelievable, that's the area where it's needed. But if you come to the Midwest, we were in the 60s today most of the day in Chicago. Out east, same thing. It's not hot, so you don't need it for heat. You don't need it for air yet. So any build is not friendly at this time of the year. So we'll see where that carries you. Want to remind you that if you're a trader that trades the spiders, the ETFs, or the futures, and you mix it all together, because how could you possibly trade the ETFs as an example without knowing what's going on in the Dow futures or the S&P futures? I have a package called a combo package that we put together. And it's both videos. My morning subscriber video and my afternoon spider video is a combination price with a discount. The technical analysis there, you're going to get a lot of fundamentals. I will tell you in the afternoon what's market's looking for in the morning in terms of reports. And in the morning, I bring you up to date with everything going on from Asia and Europe. We cover all these charts, approximately 40 futures. Somebody asked me to cover lumber. I'm going to start doing that in the other one. And I keep adding to the spider ETFs for you. So how do you get this? Well, you go to our website, www.iraepstein.com. The first 30 days, $16.90. It's not expensive. After that, it's $28 for every 30 days. Eventually, we may make a package where if you want to buy it for a year, we'll discount it further. www.iraepstein.com. I'll talk to you all tomorrow. Have a good day.